This right here is the only top-down analysis video that you'll ever need. I will go through my A to Z process on how I'm analyzing the markets all the way from the monthly time frame down to the 5-minute time frame. I will also show you guys how I managed to start the month of August with two 1-to-2 trades that went straight to profit, one on EURUSD and one on GBPUSD, trades that were shared before for all my students to take. This is the exact framework that I use every single day to build a directional bias and find high quality trading setups. I will also show you guys how I apply the same exact framework on trading NQ on the 1-minute time frame. So stay until the end to find out how to exactly do a correct top-down analysis. Now, first of all, we will go through how I do top-down analysis on the Forex markets, because I've been trading the Forex markets for the past 7 to 8 years and I'm mainly an EURUSD and GBPUSD trader. I know I've mastered the analysis game. Just using simple price action and simple concepts, I managed to reach $6.7 million in profit from capital and also get a few $1 million in payouts. So starting right here on EURUSD, I start from the monthly time frame. So this is a buy that I took. Now my entire thinking was the following. As you guys can see, this trade was taken on the 1st of August. So let's just go back with the replay tool and look at the monthly time frame. Now monthly time frame has given a reaction down. We had a very bearish close, and the reason for that is because we were in a fib move down. So as you guys can see, we basically tapped the monthly flip zone right here and gave a nice reaction. This is the monthly flip zone because this is the point where we had the break of structure to the downside and a big move down. Now when this happens, we usually retest that and give a nice reaction, but I wasn't really looking at sells. I was looking at buys because my recent price action showed me that price tried to go lower and instead it broke structure to the upside. So once we have a break of structure in one direction, we're most likely gonna see price retesting the area that it broke. So now that I have in mind my monthly time frame going down, retesting this area that it broke, I can go down a little bit further. Going down on the weekly time frame, what can I notice? I begin to mark the market structure. So that means marking the lows and the highs in the market. In this case, I have the low here, I have the high here, I have another low here that created this high. Going a little bit deeper, I can notice that this high right here, the most recent high, was actually created by this low. As you guys can see, we have a bearish candle right here that pushed price to the upside. So for me, this is the most recent low and this is the high. So now I have my low and highs in the market. Now when price is coming down to retest, we have two scenarios. We have the scenario where we're just retesting for price to continue in the same direction, or we have the scenario where price is looking to break structure and switch biases around, and then we get a retest and a continuation. For that to happen, we need the candle to close. So if I mark the low demand area right here, I can now wait and watch for price to see how it reacts. This weekly candle was coming down very aggressive. It actually broke the lows. But what have we learned along the years is that weekly lows and highs are usually liquidity points. So once we take out multiple weekly lows, we may see a reaction. That's why most people lose trades at these areas, because they enter sells thinking that price took liquidity and will just continue in the same direction, which is wrong. You need to wait for the candle to close to confirm that price has broken this area and wants to continue lower. So in this case right here, weekly came down, took out these weekly lows and started to react. So for me, taking a trade there, because my monthly time frame was bullish, my weekly time frame is bullish, that makes sense because I'm taking a trade at the demand area. So basically, if that area doesn't hold, that means price will switch bearish and continue down. I call this area my last standing area. So what that means is if this area fails, then price will continue the other way. So for me, it's worth trying to look for buys in case price rejects and comes back up. It's the highest opportunity area that we can find. So now that I have my bias in mind, I go down on the daily time frame. So look at daily time frame. Daily actually broke lower, but that doesn't mean the weekly will also close below those lows. So daily did close below the lows, which created a break of structure down. So what happens once we have a break of structure? We're gonna have a retracement. So because the weekly candle was not closed, and this is Wednesday, by the way, so we had 2 more daily candles to play out before the weekly close. Because the daily lows right here were taken, I can expect a retracement. So now I can look for buys in the next 2 daily candles for price to return back to this area and weekly to reject. So now comes the 4-hour time frame, where I like to go and again watch price action. I usually want to see a 4-hour bullish close, so just so it confirms that price is ready to move to the upside. So now marking 4-hour highs and lows right here. I'm waiting for a 4-hour candle to close bullish during participation times. So what that means is I'm looking for a 4-hour candle to close bullish between London session and New York session. Let's just move a little bit forward. And as you guys can see, this was Friday. Now Friday we also had NFP. So a lot of this volatility came from NFP, which again, I always talk about this. You don't need to avoid taking trades during news if your technicals give you a setup, right? So fundamentals should also be a plus to your trading. Now we have to wait for liquidity to be taken. We had a 4-hour lows right here, right? We had a 4-hour bullish close right there, and then price, this 4-hour candle, this London 4-hour candle closed bearish. So now I'm expecting liquidity to be taken. I'm also expecting liquidity to be taken looking at the 1-hour time frame. Obviously we have the same high and low, and look what happened. We started to create a nice range. Now price was looking like, you know, it's being set up to go long. We've been building liquidity right here, trendline liquidity. So now what I'm waiting for is for that buy position, my last chance, you know, to take buys. I'm waiting for liquidity to be taken. I go down on the 15-minute, and what do I see? Right here, price comes down. It gives a fake break of structure to the upside. We have the high, we have the low, price breaks higher and then starts coming down, and exactly before NFP, price takes the low again. So that's when I enter the buy position. Going even lower on the 5-minute, you guys can see after this 5-minute bearish close right at the lows, I executed the trade, and as you guys can see on the screen, I also send a trade alert that I entered this buy position. I'm always being transparent with my trading, and that's why I send whatever trades I take on my main portfolio in my Discord channel. Now last month, unfortunately, we finished at a small loss, but this month we already started very good with 2 wins, 1 to 2, so that's 4-hour return. I entered the buy position using a 25 pip stop loss, which is my usual spiking range for NFP in case price wanted to tap lower, and price played out amazingly. Now, it's not just about this, it's also about where price is now, because if we go back on the weekly time frame, you guys remember the weekly candle close is very important because weekly took out weekly lows and then rejected. Look where price is right now. So if you go even down lower on the daily time frame, we can see the exact reversal that we caught, and we caught that because we did a multi-time frame analysis. So we went from the monthly all the way down to the 5-minute for that entry, and as you guys can see, the higher time frame always wins. We had a full reversal and price continues to push to the upside. Now again, in hindsight, if we would have allowed this trade to continue, that would have been a 1 to 12 risk reward, but I have my trading rules. I always take my profits at a 1 to 2. This I should have let a runner because we could have at least caught a 1 to 5 for the full 4-hour reversal, but it is what it is. It happened way too fast and price just tapped our take profit. So now, as you guys can see, price is continuing to the upside. Now, same thing happened on GU. This was a trade after NFP, happened next week on a Wednesday, and is the same exact thing. If we go on the monthly time frame, we can see price broke, had a break of structure on the monthly time frame. We retested the area that it broke. The monthly candle did close bearish. Weekly, same exact story. We had the lows right here. We had a high. Price tried to break lower, couldn't break lower. So that for me is a sign price wants to move higher. Daily was coming up. we had nice price action. Again, very simple price action. 4 hour, we can see 4 hour realigned bullish right here. This was the high that created this low. Price broke structure with a break of structure right here. Sorry for the bad writing. And then price retested the area that it broke. And we took this entry basically during participation times. I think this was this was taken during London. So during London right here, took this position. Now, obviously 2 entries, there's a bunch more into it. If you guys want to learn how I trade exactly, you can go down to the first link in the description and apply for the mentorship. I've opened a few more spots for this month to do the insane demand. So don't forget to check that out. And yeah, this was another good trade that we took. We had Asia low being taken right here. Price gave a nice confirmation. I entered the trade, had a bigger stop loss just to cover these lows based on my 15-minute time frame, and then price just started going towards TP2, and as you guys can see, it even continued higher. And now we're tapping another high time frame area. So that's easily how I analyze the multi-time frame analysis on the FX pairs. Now let's switch on to the futures market. And I'm gonna go through it very quickly. So it's the same principles apply. Now obviously the NQ moves a lot more faster, so it's difficult to wait for those higher time frame setups, but I'm still using the higher time frame analysis to look for trades on the lower time frames. So right here, let's take a look at yesterday's trade that I had. There's also a recording of it. So basically I took sells, I can't remember where exactly. I think I took sells around here, and basically I went for a 1 to 3. You can watch the breakdown on my channel, something like that, right? So let's see why I took that trade. Well, looking at the monthly time frame. So monthly right here was at the highs. Weekly did close bullish, but we were at liquidity point. So we had price close bearish on the daily time frame right after we broke structure down. So daily broke structure down, came down to the retest. This was my extreme area where I want to look for sells basically. Now going down the 4 hour time frame, we had the same confirmation. Price, as you guys can see, came here, tapped the supply area, gave a nice 4 hour bearish close, another bearish close, and price was just ranging here. And then price came back to retake liquidity for New York Open. So going down on the lower time frames, 1 hour came to take out that high, rejected, and then basically the next candles I was waiting for an entry, going down the 1 minute time frame, and this entry, you can see me take this live again. There's a video on my channel, but basically waited for price action on 1 minute, breaks of structure, again market structure. We had a low here, the high, we took liquidity, price broke structure, came down, and then it came up for the retest of the flip area right here, gave me confirmation, and I think I entered somewhere around here. And yeah, the rest is history. Basically a very quick 1, 2, 3 trade based on liquidity and higher time frame analysis. Now again guys, this is the most important aspect that you need to learn. You need to learn how to do multi-time frame analysis starting from the higher time frames. I've had hundreds of students, and most of the unprofitable students, they are not profitable because they only look at the higher time frames. They only look at entries on the 15-minute time frame, the 5-minute time frame, the 1 minute time frame. But in order to do that, you need to have the higher bias in mind. So you need to know where the higher time frames are heading. That way you can trade in that direction, if that makes sense. And it's a lot easier, and it's what helped me really make a lot of money trading, because I changed my perspective from looking at the lower time frames just for entries to looking at the high time frames to make my general bias, my general direction, and what's the objective in the market. You always have to ask yourself, where is price headed? Where is the next objective in the market? And once you find that, then it's pretty easy, because you just look at the lower time frames during your trading times, which is the most important, and take trades in that direction. And that's how I managed to start a month with a quick 2 trades that brought me 4R. So if you guys enjoyed this video and you want more informational videos, more educational videos for free here on YouTube, help me by pushing the channel to 50k subs, and also comment down below what you want to see next. And hopefully I'll see you in the next trading video.